Now, I personally am a huge fan of the S&P 500, but don't necessarily buy into the S&P 500 on its own, but instead do so with covered call style ETFs that offer exposure to the S&P, but also a massive amount of income in the meantime. Now, just as of recently, I came across and started buying into a newer S&P 500 covered call style ETF that does exactly both that. Offers a massive amount of growth potential, but also income potential from day one. Now, this S&P 500 covered call ETF might be one of the best ETFs to do this across the entire market, at least in my opinion. So if you want to dig into this ETF with me, understand exactly how it works and how well it's done since inception, well, then make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the S&P 500 Premium Income ETF that I'm talking about, that I'm a huge fan of and also started buying just as of recently, is ticker symbol GPIX, or the Goldman Sachs S&P 500 Core Premium Income ETF. Now, I've talked on my channel before about GPIQ, and I've also mentioned this one, and I'm a huge fan of both of them, and this is exactly because of strategies that both GPIX and GPIQ use. Now, even though this fund has only been trading for a relatively short amount of time, it's already performed pretty well and offered some growth potential and income, which I'm going to share with you guys here in a second. Now, the overview for GPIX, it says seeks current income while maintaining prospects for capital appreciation. Now, of course, there's ETFs out there in the market that I've actually talked about on my channel a lot that offer a massive amount of income and maybe not necessarily any capital appreciation, or ETFs that offer a ton of capital appreciation and maybe not as much income. But the cool thing about GPIX is that it offers exactly what I personally am looking for in my long-term portfolio, and that's current income while also some prospects for capital appreciation. Or simply put, I want to earn income now while also hopefully having the actual investment grow over time. Now, the reasons to consider, it says seeks consistent monthly distributions. GPIX aims to generate a consistent monthly distribution rate, generally from option premiums and equity dividends. Now, core equity exposure with lower volatility provides core equity exposure to the S&P 500 index and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative to flat markets. Now, this is one of the most important parts right here. I'll share with you guys why in a second. We're going to dig into it. But the fact that this ETF dynamically sells call options, allowing for lots of participation at times when the market rips, which, as we know, the S&P 500 doesn't always go up, but over time, there's lots of times in history where it does. So this is going to help this ETF, at least in theory, grow a lot faster. Now, lastly, it says diversifying source of income seeks to deliver attractive income with a lower correlation to traditional income sources and their risks. Now, shout out to the gaming dividend on seekingalpha.com. I came across one of their articles right here where they talked about GPIX and explained the fund structure, how it's strong, and exactly why this ETF could potentially outperform. Listen in. They said, I like GPX structure because it maintains exposure to the S&P 500 index and actually holds the underlying equities within. As a result, the ETF is comprised of total fund assets amounting to nearly 300 million that's spread across 507 different holdings. The fund's holdings have a weighted market cap of 1.06 billion, which also comes to no surprise since GPIX is made of large caps. The holdings maintain an average price to earnings ratio of 27.06x and an average price to book ratio of 4.66. Now, they also said we can see that the top 10 holdings for GPIX account for over 35.6% of the total assets, meaning that these top equities have a big influence over the daily price action of GPIX. Now, they also said, this is the very important part, listen in guys, they said in addition to the strong underlying holdings, GPIX implements an option strategy that helps generate a higher level of income. Unlike traditional covered call ETFs, GPIX deploys a dynamic options overwrite strategy, which means instead of writing options against 100% of their portfolio, they will sell call options against a range of 25 to 75% of their equities. They do this because it allows for a greater amount of capital appreciation to be experienced. And I like the fact that it's dynamic. The dynamic nature means that GPIX can write options against a lesser amount of their holdings during strong bull markets, which allow the price to move up alongside the S&P 500. However, GPX can dial this amount up to the higher end of the range during sideways or downward moving markets. This would actually result in the possibility of GPIX outperforming the S&P when the market conditions aren't favorable, since the fund will be able to collect a higher amount of income from the options, of course. Now, that reason and that reason alone is the main reason that I personally added GPIX and GPIQ, basically the NASDAQ 100 version of this ETF, into my portfolio over the the past several months, and I've made it very clear multiple times that I intend to build out these positions a lot larger over the next year. Now again, during times where the S&P 500 moves up in price substantially, which again historically there have been a lot of times that this has happened, this ETF is going to potentially see a massive amount of capital appreciation. But during times where the S&P trades sideways or even flat down a little bit, this ETF can generate income because of the option strategy. Now, as far as distributions go, this ETF offers a 12-month trailing distribution rate of around 7.47%, and this was as of a month or so ago. And if you look at all the distributions this ETF has paid more or less, we're talking in the 33-35 cent range, which is not bad whatsoever, especially because this ETF is going to potentially offer you a lot of growth. And speaking of growth, at least as of film in this video, this ETF is up around 27%. Now for a premium income ETF to be up 27%, considering it's only been trading for a relatively short amount of time, that to me is very, very impressive. But that to me also makes a lot of sense because of course the dynamic cover call strategy, which means this ETF does have the potential to grow a lot faster than some of the competitor other S&P 500 premium income ETFs. Now again, I don't think this ETF is necessarily perfect for the investor out there that wants to generate the maximum amount of income monthly, or the investor out there that wants to generate the massive amount of growth monthly. There are different ETFs out there for almost every single use case, that's the good news, but for investors like myself that want to earn say 7%, 8%, 9%, 10% per year in income, but also want their ETF and their portfolio to grow over time, this ETF honestly, as far as strategy goes, almost does it perfectly. Now lastly, before I go, if you look at GPIX performance over the last 1.22 years and compare it to SPY, which keep in mind guys, SPY is very, very hard to outperform. I mean, let's be real here. Growth with a $10,000 investment and dividends reinvested along the way over the past 1.22 years would have returned in around 40.62% total return for GPIX, or an average around 32% per year. Now SPY has offered around 46% and almost 37% per year. So again, it didn't outperform SPY over this time frame, but keep in mind, I'll repeat, SPY is very hard to outperform, and also keep in mind that for premium income ETFs, a lot of times you can't really expect them to outperform something like SPY because the fact that you're getting income a lot sooner, you're going to have to sort of give up something. But at least so far since inception, this ETF has not only almost kept up with the SPY, but also has paid investors a large amount of income every single month and has grown substantially, which is awesome. Now I will say, other than GPIX, the SPYI ETF, the NEOS S&P 500 High Income ETF, is the only other S&P 500 High Income ETF that I not only own a good amount of, but I also am a super big fan of. Now if you guys want to see more about SPYI, I talk about it a lot on my channel. Check out some of my other videos. So now that we talked about maybe my newest favorite S&P 500 core premium income style ETF, GPIX, I share with you guys how this ETF works, how it earns so much income, at least potentially, and how it's grown as fast as it has historically. I lastly, most importantly, want to hear from you guys down below. Is the Goldman Sachs S&P 500 core premium income ETF, GPIX, an ETF that you personally would hold on to? And if not, what other S&P 500 core premium income ETFs should I look into that might be better? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.